Good morning, everybody. It's the 24th of July. We're Signal Centre talking ball. Happy Friday to you all. I'm Joe Neighbour, joined by Steve O'Hare and Ian Coleman. How you doing, gents?
All good, thank you.
Excellent. Yeah, good, thank you. It's Friday after all.
Is the sun shining down south?
No, it's not at the minute.
Nah, don't
Bit
know what's
grey.
going on. Yeah,
Yeah.
Looking out in the garden, the kids are sleeping in a tent.
Are they?
Yeah,
Are they still asleep, or they've been
yeah,
up
they're still
since
asleep.
5?
Yeah,
All
they're
right,
still
not bad
asleep,
going.
yeah.
That.
Yeah,
I probably didn't get to sleep till about 3 o'clock in the morning. That's what normally happens when you go camping.
yeah, quite possibly. They love it. They're testing out the gear ahead of our trip to France. So
Oh, nice one.
yeah. All fun and games this morning.
Yeah,
Okay. Yeah.
On the old markets.
Yeah.
What's anyone got any headlines for us to share? What's
It's
causing it?
China have asked the US to close down their consulate in Chengdu, I think it's called,
So they're
which is
firing
their
shots both ways now, are
which
they?
is their main spying consulate.
it's a CIA. It's a CIA one, is it?
Yeah, that's what they've put on Bloomberg. It's basically
Yeah.
that they can listen in to let's have a look where it says. Corona, 200 infections a day in the US.
200,000.
200,000, yeah.
Wow.
It says China ordered the US to close its consulate in south western city of Chengdu after the allegations about spying, blah, blah, blah. This consulate serves as a key US listening post for developments in Tibet, where Communist Party efforts try to suppress dissidents, blah, 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 blah. Long been a focus of tension between the China and US.
Very interesting.
Another flashpoint, it says, basically. So, yeah.
Cool. So everything is setting off risk-wise at the minute.
Yeah.
US dollar is taking a bashing as well. I'm sure you've got a chart up for us on that, Ian, that you can show.
Oh, it's just relentless, isn't it? We said before, it's just this is the 4-hour chart. I mean, we've got we mentioned the other day, we've got this sort of trend line support here at 94.21, but if that breaks, you know, it's channel support down here, which is the previous swing low, getting outside of that range. So virtually every dollar pair held inside these large ranges that we saw, obviously, when at the start of Corona in March, and now most of the dollar pairs are obviously breaking out of this range. So I don't see any reason of. I mean, euro dollars hit a 50% big 50% fib, but it's just pushing through it. I don't see any reason why it's going to stop, really. I still think buying dips is the call for euro dollar cable, etc., etc., etc. And again, cable. You know, this was called really significant level 127.25. It was a previous swing low. It was also a 61, well, close to a 61.8% fib, and it's just pushing up through there. So I think next big stop anyway is around about 130.60. But I think it's a case of go with the flow still at the moment.
I mean, looking at gold, obviously dollar weakness is sending that higher. We just below $1,900 now on gold. And silver as well has been smashing it still. I mean, obviously a little bit below swing lows, but looks to me like it's probably just consolidating ready for a breakout.
Is that your new headphones?
Yeah, it's sort of like you got a little bit of feedback or something.
Where's
there.
my one?
Do you want one? We haven't got a wire attached, Steve. We're sort of like free. We can swing our heads about and dance and everything.
All right. I'll look forward to that.
Sending one over.
Chuck
So silver.
Obviously not on the Christmas list, me.
Oil, that's sort of not doing an awful lot. I've got a bit of a channel there. I'm looking to maybe buy a dip. Decent reaction from there this morning. Looking at indices. Bit pissed off about this yesterday. This was the FTSE 100, my gun to the head trade. So I sold it around here. This dirty spike up here stopped me out before it then went straight down to the target.
Nice.
Always happens, hey?
Yeah.
That's challenging conditions. The chop is just really difficult, isn't it?
Yeah. Yeah. Chop means a number of things in Ian's book, doesn't it?
Oh
Chop.
God, yes. Chop.
This is the DAX, which is selling off equally as aggressively. I've got some support down here, bottom of this channel, and a 61.8 at 12,750, which is where I'm looking to buy on an intraday basis.
So you're trying to catch a knife then?
Well, I don't know. Is it a knife? It's clearly a bullish uptrend there. And as we've seen time and time again over the last few months or so, any dip on stocks is getting bought. So, I'm looking for a reasonable correction lower to buy into. So
yeah,
maybe there'll be some buys emerge before the weekend and push it higher. We'll have to wait and see. Anything you're looking at, Steve, on the charts?
Well, Bogdan sort of posted a pretty decent wrap on precious metals. Just a guy called Christopher Moolan just posting it on investing.com, just talking about the sort of the real gold and silver. What's happening at the moment in the markets with their price action is the warning shot that doom is coming for the stock indices, basically. So the basically stock indices ignoring the fact that coronavirus is spiking, the economy is absolutely foobar, and
foobar
prices fucked up beyond all recognition. That's what it stands for. Yeah. And so one of the main things that obviously we had that sort of the sell-off in the stocks early in the year, and gold and silver went with it. That was people liquidating their precious metal positions to fund the crap equity positions they had. The equities have all bounced back, but gold and silver have just sort of gone parabolic. Well, so silver especially.
Front running now, basically.
Yeah. So
smart money's in commodities, don't they?
Yeah, and it goes in cycles, obviously, and this is the sort of the real move. I think looking at the silver chart, where can we go? I mean, look at that on a monthly basis; it's massive. And you can see these levels here going back. It's around $19. That feels like the new base for me. I think if we do retest it, that would be a place to start to sort of build longs for the next move, because it sort of feels so overextended. Even on the 4-hour charts, you're sort of almost looking at, are we sort of forming a sort of a bullish flag, bullish pennant, whatever. I don't know. It's sort of it's not coming off at the moment, and obviously with dollar weakness, that's just going to continue higher. So and gold, I think we're getting quite close to the all-time highs.
Quite a few of my mates. Sorry,
go on, Ian.
I was saying quite a few of my mates bought physical silver a while ago.
They've actually taken delivery of it. They've actually holding it. Yeah.
Well, one of them's holding it, and I think the other one's got it somewhere stashed.
Where's it again?
Where's he live?
I'll give you an area. Worcester. There you go. Go look for him.
Okay.
I think one of the main things in this, which was interesting in the article, they're talking about the short volume. Shorts are building into this rally, and that's obviously not a good sign when you're sort of making sort of these sort of types of highs. It's shorts are building, but also the sort of the delivery mechanism that's in place in COMEX. People, the longs may hold on and await delivery, and there could be a shortfall in the ability to deliver. So that's the sort of thing where we saw the oil price absolutely get slammed because of the storage facilities not being available. This could be something else where the sort of the houses aren't able to deliver the physical product. So that's a major concern, especially and for gold as well, obviously.
So what do you think? I mean, obviously there'll be a breakdown between the sort of physical price and what we're seeing on the screens.
Absolutely,
but, obviously a lot of gold participation now is done through these exchange traded funds.
Yeah.
Which obviously are backed by the metal itself, but is that going to be a breakdown between what they're doing and what the spot price is doing?
Well, I think because you sort of obviously we saw in the ETFs in oil, they went to $10, whereas the physical went to $45 or whatever it went to. So it won't be an exact match. And you know, you get a lot of products nowadays are cash delivered, so you know, it's settled by cash, but there will be that underlying physical drag or physical pull, depending on which way it's going, that you've got to sort of like be careful of. You know, that's but what's to sort of stop it? It's just carrying on going. Not a lot at the moment, apart from people shorting it, and that doesn't seem to be working.
No. Just coming back to the indices side of things, there's been a lot of chat about obviously the breakdown there and what's actually driving the markets, and that it's only a few constituents, particularly in the US, they're actually driving the whole thing. This is a chart of the NASDAQ on the hourly, and I've marked this up and I've got an alert on here because I'm looking at the potential for a double top to form here on the 60-minute chart. So we've got these two highs up here. We break down below this 10,372, and we've confirmed that double top, and then we're obviously looking for a reasonable sort of pullback from there. Measured move of that would be roughly 9,670, something around there.
Yeah, okay.
So that'd be a chunky sort of pullback potentially. Microsoft yesterday had results out. I think they were okay, but what investors are going to be looking at is, you know, they're going to have to be pretty exceptional to give it another leg higher from here, aren't they?
Yeah, it's that technology sector, isn't it? Again, that's just to sort of.
Well, this is the image I wanted
some
to
of them
bring
are.
up.
Yeah.
So this is the 5 largest stocks. They've returned 35% year to date, and the other 495 stocks have declined by 5%.
Yeah.
Wow.
Are they the FANG stocks? Are they?
Yeah, Netflix isn't in there. This is the
Yeah.
top 5. So you've got Facebook, Amazon, Apple, Microsoft, and Google. This blue line here represents the strength that they've seen year to date. Obviously, that takes into account the crash that we've seen, and then they've just completely surpassed that and you know, smashed it. The recovery in the grey line is from the S&P. So as we know, had the big crash down, and it's just sort of hovering around about or just below the previous highs that we saw. And then you've got the remaining 495 companies. So the S&P with these 5 companies stripped out is down 5% year to date. So, you know, it's these 5 that are driving the whole thing. And if they come back with numbers that are underwhelming, then, you know, are we going to see a big old bout of profit taking? Because there's going to be a lot of profits in here that people are going to want to think about taking at some point if they're, you know, the worries start to intensify. And as you're seeing with likes of precious metals, you know, that could be the catalyst potentially if people are starting to worry.
I mean, Netflix must have done well as well.
Yeah, it's done fantastically well.
Yeah, because that's what
they
people
had
do.
a bit of a drawdown, didn't they? When they.
Yeah.
It's not in the same league in terms of market cap as those other stocks. So that's the Netflix chart.
They were expecting 9 million new customers. I think they only got 6.
Yeah, they warned that potentially, you know, to worry, the outlook is not as potentially great, you know, going forward. I think one of the major issues there is that people might be a bit tired of what they're getting on Netflix because there's not a whole lot of new content coming on because people can't record.
Yeah, that's the problem, isn't it? Might have to start EastEnders all over again.
Yeah, from the beginning, back to 1984 or whatever it was.
I started watching Blackadder last night.
Classic.
Series 1.
Surprised it hasn't been banned like everything else that's funny back in the day. But not acceptable anymore.
Gun to the head yesterday. We're getting chopped about on that, and it's not much fun at the minute. Another 3 losses yesterday on our call, so we stopped out on FTSE Silver. And
was that stopped out?
Yeah, I think so. Unless you want to confirm otherwise.
What
I'll
were
have
you
a
on?
quick look now.
Aussie New Zealand dollar.
Unless it was quite late in the day.
Spike about 4 o'clock, I think, down to the downside.
And what was I? I was long as silver.
Yeah, I think just too tight in your stops, maybe. But I think that, you know, you have to have wide stops in a minute because everything's just so choppy.
Yeah, just quickly show my silver chart for a second.
Go on in.
This is the long-term chart. So this is the, always called a steward. This is the this is the swing low, swing low, swing low. Sweet chariots coming for to carry me home, and the reaction off here broken below it. So that's where we're heading. $26.17 in the silver. 38% retracement Fibonacci.
Lovely.
It's only a small retracement. It might look like a big move at the moment, but in the grand scale of things, we're talking about the all-time highs around $50 back in 2011. First target $26.17, and obviously you won't have the 50% retracement. Won't be far away from there. Let's get them on there. So there we go. That's where we're going.
Yeah,
again, ideally, in an ideal world, I'd like to buy a dip at around $19. But you know, for anyone who's long out there already, that's where I think we're targeting, that 26.17 area.
Half a tick.
Yeah.
You were stopped out for half a tick.
Yeah,
I had that a couple of days previous.
106.89, and it made an 88.5 low. Dirty
gutting,
dog.
eh? that footsie trade as well. Just missed by a few ticks and then boom, straight down to the target. Anyway, so overall, you know, bit of a double top for me there, maybe on the performance chart. Just be a bit careful there. Maybe a break of trend as well.
Yeah.
Shush.
Yeah. So there's our overall P&L. Dip below 100%, but we can get that back on track, I'm sure. So who's got a trade idea for us today?
Not too scared now.
Everyone's hiding. We're taking a day off, are we?
Yeah. Can I play the Joker card?
I haven't got anything immediate, so if one of you
I'm
guys
going to go for buying the DAX, believe it or not.
Yeah. Go on.
For a little previous swing low here. There's some cloud support as well, and if I go to these, I've got a DMARC 13 and just starting to push up, so I think we're going to get a correction to the upside, and I can get a nice tight stop, and it's going against all technical analysis, etc., etc., etc. Trev in the postman. 128.30, targeting. I'm going to go for a big round number, and I'll have a 50 tick stop. 3.4R, going long 128.30, targeting 130. The figure was stop at 127.80.
Cool.
Okay, cool.
I think buying risk assets, you know, considering what we've seen over the last couple of months on these dips, is probably a decent strategy, to be totally honest. Steve, you got anything?
No, obviously we're sort of like right on the trend line. I'm looking at this trend line in the copper, and on the 4-hour chart, we're posting a bit of a bullish candle. It's a like bullish hammer here, where it's sort of dipped below this trend line going back to May. First point, second point, third point, and a fourth point's broke it. Now on the intraday trade idea, I'm looking to sell a break of 286. So I'm going to hedge that. I'm going to buy it with a stop just below 286. So getting along at 287.15, and have a really tight stop. 285.15, and let's go for 293.15 target. So this is a high risk trade. It's we've just had a bit of a turnaround in the 4-hour candle, which finishes at 10 o'clock. So I've got another hour to play out. If it forms that bullish hammer, that's quite positive. It's rebounded off there, so it's potential to recover. So getting on at 287.15, stop at 285.15, and target 293.15.
Cool. Good luck. I'm going to take a look at oil. This is the 60-minute chart, so got a bit of a bullish channel going on here. Seen a decent correction down to the lower end of the channel. Seems to have found some support. Posted a decent candle over the last hour. Also got 38.2% fib level from those lows down there, 10th of July to the highs that we saw on the 21st. So I'm going to buy that now. We are currently at 41.08. and I'm going to target 42.50. And going to have a stop. Yeah, that'll do 40.71. So 3.97R if that plays out.
Lovely. Lovely jubbly.
We shall see. Okay, quite a lot on the old docket today. We've got German manufacturing services, which has already come out. We've then got Eurozone manufacturing services PMI, which has also just come out. We was expecting that to rise to 50.7. Have you got live squawk open to?
Yeah.
What happened with those?
Was it Eurozone manufacturing?
Yeah.
51.1.
Okay,
German manufacturing is 50.
So the European one was better than expected, and so was the German. We've got UK at 9:30, UK PMI, and then we've got US manufacturing PMI at 245, and then we have US new home sales at 3 p.m. So we did see the jobless data yesterday from the US. That was sort of mentioned as one of the triggers for further selling. I think that came in at 1.4 million additional jobs lost over the last week. So I think it's about 40 million they're sitting at a minute unemployed.
40 million.
A mental number. So clearly we're not in a great position, but it doesn't seem to be filtering through to the markets yet. But you think they're going to catch up at some point, given that sort of information.
The UK would be the same if they didn't, bring in the furlough scheme.
Yeah,
we'd be looking at similar sort of percentages. There's a lot of businesses out there, just zombie-like businesses, which aren't really making money, but they're sort of continuing to pay their staff, so it keeps the economy going for a bit longer. So, trying to push the can down the road a little bit further in the hopes that we'll get some sort of recovery. But doesn't look from where I'm sitting that's going to happen. So. No. Not good. You don't want to hear that. Not from me, you don't. Not on a Friday morning.
No, very glum.
Doom and gloom.
The sun's just come out, so.
There you go.
Something.
It's all squirrels.
So corporate calendar today. Data from, earnings from Verizon, American Express, and Schlumberger. Not sure whether they have a massive.
Schlumberger.
Yeah, easy for you to say.
I think everyone's just keeping an eye on these top five. It's all about what they do, because clearly they're the ones driving the market. So if they come in and underwhelm at any point, then they'll be the ones to watch.
Yeah, agreed.
Okay,
nice
so
one.
should we wrap it up?
Yeah, wrap it up there.
Great. Have a great weekend, everybody. Hope you've had a good week.
Excellent, and you. Cheers.
And catch you next week.
Enjoy.
Lovely.
See you later.